Hey everyone, happy Thursday, May 9th. It's about 9:30 in the morning on the West Coast, and it's time for another market update. Going back to last week, we had the big April BLS jobs numbers coming out. Over the last year or two, the BLS jobs report has really hurt us, coming in more than expected. Unemployment, as we know, has been really at really low levels, and that's emboldened the Fed to keep rates as elevated as they have been. With inflation still, sticking around and unemployment low, the Fed feels that basically, their policies aren't having a negative impact on the economy, and they need to continue to keep rates where they're at. So we really need those job reports to kind of show some weakness if we want the Fed to back off, unless we get some, unexpected progress in inflation. So going back to last Friday, we got April's BLS jobs report, and surprise, surprise, this one actually came out in our favor. There was 240,000 jobs expected to be created, and it showed 175,000 jobs. And then even the unemployment rate ticked up from 3.8 to 3.9. So let's take a closer look. And remember, the BLS jobs report has two different parts to it. It has the business establishment survey, where they're looking at payrolls, looking at things like that, doing some math and coming up with their numbers. And that's where these estimated jobs created come from. One thing to point out, they also made a negative 2-month total revision of 22,000 jobs lost or not created. March was actually revised higher a little bit, so it'll be interesting to see what we see next month in those March numbers. And then February was revised down 34,000. So that's been a common trait. They come out with these big numbers, the market reacts, then they revise them lower, and the market doesn't. We don't get that same jump or positive for us. Other thing to point out in this business establishment survey is in the birth death model, where they're trying to basically figure out how many jobs were created or lost based on new business creation, small businesses starting and going away. So in this model, the BLS jobs report shows 363,000 jobs created. The ADP, which came out a couple days before this and was stronger overall, that only though had 38,000 jobs created, with their birth death model. And ADP is looking at, I think, 10,000 payrolls. So their data is a little bit more, real time, a little bit more trustworthy, in my opinion. So you take the difference there is 325,000. You subtract that 325,000 from that 175, it's actually a loss of 150,000 jobs. So, just interesting, a lot of math, a lot of estimated and calculations that they come up with these numbers and seasonal adjustments and things like that. The next part about the BLS jobs report is the household survey. So this is actually where they call people that are in the system, talk to them. Do they have jobs? Are they looking for jobs? That kind of stuff. And that showed this is where they get unemployment rate from that. We see quoted in the news all the time. And there was only 25,000 jobs created. The labor force jumped by 87,000, and that's why in the participation rate remained unchanged. So that the unemployment rate stayed at, jumped from 3.9 or 3.8 to 3.9. Like we talked about, the Fed, most of their members believe unemployment won't go above 4.1. So if we could somehow push that 4.1 and above, not that we want a lot of people to lose their jobs, but if that happens, then that's something the Fed probably would have to take action on. And that's when we might see a rate cut sooner than maybe the markets are expecting right now. That's what we want, I guess. But again, we don't really want to root for unemployment to jump. The other part about this, the hourly and weekly earnings, this is really important. It's wage inflation. So the more people are making, the more maybe we're spending. So the Fed pays really close attention to this. Average hourly earnings was up 0.2% month over month, but year over year it actually dropped because of the stronger number last April. And then the average weekly earnings dropped to 0.1% from 4.1 to 3.9. And average weekly hours are at 34.3, which is a really low number. Or pushing all-time lows, as that drops. And just keep in mind, that doesn't seem like a lot, 0.1 hours difference, but, you exploit that over our whole workforce, that's a big chunk of actually, basically jobs lost. It's less income everybody's making out there. So just something to keep in mind, but it was nice to see that the BLS jobs report kind of came out in our favor for once. But again, we don't necessarily want to see too much weakness, but enough that, the Fed cuts rates and helps us out on that front. Next thing we got today, we got initial jobless claims. So people filing for unemployment first time. This actually jumped to 231,000, 210,000 were expected. This on top of the BLS jobs report. This is, again, not what we want to see as far as people losing their jobs, but as far as what the Fed wants to see if they want to cut rates, this, is helpful. So this is actually the highest number, I think, since last August. So something to keep an eye on, and something the Fed's keeping an eye on. And then we got some March appreciation numbers from CoreLogic and Black Knight. Both of them jumped 1.2% month over month. I think CoreLogic's at 5.3% year over year. Black Knight's at 5.6% year over year, which were actually down a little bit because, again, last March's numbers were a little bit higher this time of year. Home prices tend to jump. Appreciation goes up because it's the selling season. So good, good for homeowners. This is, again, showing that the housing market stayed pretty strong. Even with elevated rates, home prices continuing to elevate, just enough demand to keep up with the supply that's out there. Although supply has been ticking up as well. So if we get some help on the rate end with supply ticking up, that should lead to more transactions, more people being able to buy homes, more realtors selling homes. Next thing we got, so average 30-year actually, last week we were at 7.42. We dropped to 7.20 as of today. Maybe a little bit lower. It hasn't updated today, but a good little drop at, almost a little over a fifth of a point in a week. Heading in the right direction, but really it's just going to matter about these job reports and different CPI, like CPI next Thursday, or I'm sorry, next Wednesday. We'll get CPI. That's the next inflation report. That's the next, market move we're going to get out there besides some more jobless claims and things like that. But, overall, a pretty good week. It was good to see. Again, especially since that BLS jobs report has been so unfriendly to us over the last couple of years. Definitely has not helped us out at all. Again, don't want to see a lot of people lose their jobs, but good to see that maybe some of the market narrative stuff's moving in the direction that would, make the Fed move where we want to go, which is cut rates, hopefully sooner rather than later. Right now, the markets are still not really pricing it until their September meeting, but maybe it could get bumped up to that July meeting. Definitely probably not coming up in their next meeting. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, and we'll talk soon. Thanks, guys.